Hello people, welcome back after the break. Now we are starting a new topic called IND AS 103 that talks about business combination. I think IND AS 103 is not a stranger topic to us now. By now we have heard enough times of IND AS 103. Goodwill calculation, control card definition, all that is given under IND AS 103. So basically business combination simply means your amalgamation. You have studied accounting standard 14 amalgamation in your CA intermediate. Now in CA final we call it as business combination. Fancy name, pretty much the same stuff. Okay sir. Now we will study when two businesses come together, when there is business combination happens, like what are the things we need to keep in mind. Okay, full-fledged we will look at it. Okay, first the distinction. Some of you, I think we have discussed this. Once again, I'll call it out. There is an overlap between IND AS 103 and IND AS 110. Business combination as well as subsidiary ka consolidation. So some of you may be wondering, what is the difference? Sir, the day you get control, on the day you get control, first time when you get control, you'll have to apply which standard? IND AS 103. That day you need to find out goodwill, you'll have to value NCI, you have to take subsidiary ka net assets at fair value. All this is recommended by which standard? IND AS 103. So IND AS 103 is one-time application. It will be applied only once. That on what day? DOC. Only on the date of control, IND AS 103 will come into picture. Consolidation is a recurring standard. Okay, so consolidation will come not on the DOC date, it will come on the DOR, date of reporting. That is usually at the end of the year, you prepare consolidated financial statement as per which standard? IND AS 110. So if you have control for 5 years, you need to prepare CFS for 5 years. CFS, IND AS 110 will keep coming every year. IND AS 103 will only come once, that is on the date of control. That's it. That's a distinction between IND AS 103 and IND AS 110. Okay. Now people, what is the meaning of business combination or the definition of business combination? IND AS 103 says business combination is a scenario where one company, acquirer, will get control over another company called acquiring. That's all as a simple definition they're saying. Business combination is a transaction where one company, that is acquirer, will get control of another company called acquiring. So only if there's control, IND AS 103 will come into picture. So it does not for your subsidiary, associate, joint venture and all, this will not apply. IND AS 103 will only apply for the control scenario. Okay. So that company who has got the control, we call it as, you can call it as acquirer or parent. The other company, you can call it as acquiree or subsidiary company. So business combination is a simple scenario where parent gets the control over subsidiary company. Okay, na sir? All this again not that very important. And now the first thing is, you need to first ask yourself or confirm whether it is really a BCom as in business combination or is it an asset acquisition. When a transaction has happened, you need to really check whether it is a business combination BCom or asset acquisition. Why? First, sir, if it is business combination, then you need to calculate goodwill or bargain purchase gain. You need to calculate NCI. You need to calculate net assets at fair value. Right? Even DTA, DTL ka accounting will come. All this accounting or calculation is required only if it is business combination. And IND AS 103 says we have done this. Any transaction cost goes off to SPL. In one of the problem it came. I think when we did IND AS 38 or something, I don't remember. As per IND AS 103, if there is any transaction cost, it goes off to SPL. Transaction cost means the transaction which are necessary or the cost which are necessary to do this business combination. Business combination is a big activity, no? You might appoint some chartered accountants, investment bankers, some ROC filing fees and all will be there. All that you can call it as a transaction cost. All the transaction cost will straight away go off to SPL. This is the treatment when it's a business combination. Suppose you conclude it is not a business combination, but it is only a asset acquisition. Then goodwill, bargain purchase gain, DTA, DTL, fair value of net assets and all not required. And whatever transaction cost, we know that when you acquire an asset and if you incur any transaction cost, like when you buy an asset, delivery charges, transportation cost, you transfer it to SPL or capitalize. So that means these two treatment are same or completely different. Completely different. If it's BCom, one set of treatment. If it's a asset acquisition, entirely different treatment. So first you need to confirm whether the transaction we have done, is it really a business combination or is it a asset acquisition? So why the confusion will come? If you just observe, right? Let's say, I mean, this was a case. I think I don't know whether you remember or not. Ola, no. There was another company, competitor to Ola called Taxi for Sure. I don't know whether you have heard this or not. They used to run nano cars in Bangalore. Yellow color nano cars. Now it is mostly not visible in the market. Earlier, right, there was another company who was a competitor to Ola and Uber called Taxi for Sure. They had only Nano. Tata Nano is there, no? They used to run Nano. And the fees was very less. The ride charges was very less. So Ola acquired the Taxi for Sure. Hence now you are not able to see that. Now let's take the same scenario. Let's say Taxi for Sure has 1,000 cars. That particular company has how many? 1,000 cars. Ola acquired Taxi for Sure. Ola acquired Taxi for Sure. Now the question is it really an asset acquisition or a business combination? Are you getting the point over here? I mean, I'll give you the answer. There's some parameters. But did you get that there could be some confusion? Because Ola, when they acquire the company, they'll also get company car assets. Right? So if Ola has acquired 1,000 cars of Taxi for Sure, is it that Ola has acquired Taxi for Sure company? Is it a BCom or is it a asset acquisition? Is it a pure 1,000 car purchase or is it a business purchase? It's a drama. That you need to figure out because we know the difference. If it is asset acquisition, this treatment. If it is business combination, entirely different treatment. Comfortable? For that, they have built the definition of business. To help sort out, they have built out, like to conclude whether it's a business combination or an asset acquisition, there are some definition of business they have built in, and there is also one more test. I'll talk about that in a bit. Now, if you want to call something as a business, a business should have 3 features. A business, this is a business definition, not that very important from examination context in my view. At best, 1 mark or 2 marks, if at all it comes, rare. But it's okay. We will concentrate at least half an hour. Next half an hour we'll spend and cover off all this case study in case it comes 1 or 2 marks also. If you want to call something as a business, it should satisfy 3 features: input, substantive process, output. What did I say? Input, substantive process and output. These 3 should be there for you to call something as a business. If they are not there, then it cannot be a business. Okay. Now let's go one step and understand input. Input means what? Now, people, if you want to run any business, you need to have assets. You need to have tangible assets, intangible assets. You need to have employees and all that, right? The machineries, the factories, the workers, the intangible assets, all that comes under input. Inputs are basically the resources that is required to generate the output. If you want to produce some goods, means you need to have those machineries and intangible assets and workers. All that becomes your inputs. Dana? Now, sir, if you have a machinery is what now? Input. Okay, from the machinery, automatically you will get an output or you will have to have a process. That process should be a substantive process. Substantive process means there must be a clear rules, protocols, framework from the input how to get the output. From the input, how do we generate the output? There should be a clear rule. Like if you want to, like you and I, maybe we like to drink Coca-Cola. What's the drink you would like to prefer? Coca-Cola, na Pepsi, na Mountain Dew, na? It's like thumbs up. Okay, fine, thumbs up. I'm giving you 2 thumbs up there. Okay. Now people, you're saying you want to drink thumbs up. Right? You and I, can we manufacture thumbs up? Can we go home and go to our house and say, today, kuch tufani karte and make thumbs up in our house? There is a clear formula. There is a clear formula for thumbs up. Yes, no, you need to have this many ingredients. It has to be stored at a particular temperature. It has to go through a certain, maybe, I don't know, fermentation or whatever it is. I don't know, right? There is a clear process. That we call it as a substantive process. So basically, there is a clear rules, protocols, framework, etc. from input to get the output. That only we call it as that should be there. Okay. And input when you combine with process. Input when combined with process generate the final product called output. That's all. This is the outcome basically. Output in some cases may be there, some cases it may not be there. Like startup companies. Output means the revenue, sales. Startup companies may take at least 6 to 7 months or maybe 1 year to generate their sales, especially if they are a research startup and all, right? So output is not mandatory as long as you have input and a substantive process, it's good enough. But these two, when they come together, usually generates another component called output. That's the finished product or final product. That's the definition of business. Any problem or okay? Okay with this so far? Now, they felt initially this was the definition. They still felt substantive process. What constitutes substantive was also debatable, because every company will have some process. Now, if we are doing a coaching, there is a process. There is a team who logs in and sets up the Zoom or your IDs, etc., etc. So there is a process. So now, whether that process is substantive or not, how to prove it? There's still an ambiguity, right? Hence, what they said was, let's come out with a test. Let's come out with a test. This we call it as concentration test. What test? Concentration test. And this is totally optional. Meaning, if company wants, they can take this test. Or if company wants, they can reject this test. That absolutely their call. Okay, sir. One test is given. Okay, that test is called what? Optional concentration test. If that test is taken, and if the test ka result is pass, it is automatically asset acquisition. If this optional concentration test, if it is taken, and if the test passes, then it is automatically what? Asset acquisition. Okay. How it passes, I'll tell you. We have one question on that. We'll take it out. If this, since it's optional, the test may not be taken, or if test is taken and it fails. If the test is taken and it fails, or if the test is not taken, it does not become business combination. You'll have to do further assessment. If the test is not taken, or if the test is taken and it fails, then it does not become BCom. You have to do a further assessment test. That we are about to look at it over here. Again, these are not that very important. Fine. Now, maybe I think 3 years back they introduced this. Okay, 2 years back, I think roughly, right? Optional 2 or 3 years back. Maybe that attempt, 1 or 2 attempts, this could be a little relevant. Now, in this context, this is a numerical question. I'll take you through this. This can be tested. This one, don't know. Not that very important, but theory question can come around this. So, I've just written that. So, first we'll cover this part. Then we will do this part through the numerical. Okay. And now, what is this test? Let's go one step back again. What is this? Optional concentration test. It's totally optional. If the entity wants to, they can take it. Otherwise, ignore it. Their call. Now, if this test is taken by that particular company and the test car result is pass, the test passed. How it passes, I'll tell you. If it is passed, then automatically it becomes what? It's not a business combination. It becomes asset acquisition. So, you have not acquired a business. You have acquired an asset. So, do asset acquisition ka treatment. Don't apply business combination ka IND AS 103 treatment. Now, if this test is taken and if it fails, or if this test is not taken, you'll have to do a further assessment. What further assessment? You'll ask yourself that, is output available? Output means the revenue. Is the revenue, is company already generating the revenue or not yet generating the revenue? Okay, because startup companies may not generate the revenue. So, you'll ask whether is company generating the revenue. If the answer is yes, the company is generating a revenue. Okay. For you to call process is substantive, for you to conclude process is substantive, one of the two conditions should be satisfied. One, the process should be critical to generate the outputs. Process should be critical to generate the outputs, and along with the other inputs, workforce also should be taken over. One more point. What is it once again? If you want to call this, if the test is taken and if it fails or not taken, you can conclude process is substantive. Sir, if it is process is substantive, means it becomes business combination or BCom or business. Right? For a process to become substantive, one of the two conditions should be satisfied. One, the process should be critical to generate the output. Second, in the same condition, one more point, along with the other inputs, workforce also should be taken over. First part I think is common. Process is critical to generate the output. Now, in case of especially the, as we said, thumbs up over here, unless you know thumbs up ka formula, can anybody produce thumbs up ka drink or they cannot? They cannot, right? That's because there is a clear way to produce that particular drink. Yes or no? So that's what the first one is trying to say. Process should be critical to generate the output. Meaning, if that process is missing, you cannot get the output. That's what we mean by critical. Process is absolutely required for you to get that final product. That is one. That should be there. And if you're doing a business combination, right, then subsidiary ka all net assets will take over. Correct? No, parent will take over subsidiary, call the net assets. All that assets and all is inputs. No, along with inputs, you have to take subsidiary company ka employees also. If you want to call it as a process substantive, along with the assets, asset are all inputs. Along with those inputs, you should also take over subsidiary ka workforce. That is the thing. Sometimes when you do business combination, no, you'll fire people, right? We'll say like, we don't need them, right? At this point to say, for it to be a substantive process, one, along with other input, you need to take over workforce also, meaning employees also you should take and retain them basically, not fire them. Either this condition should be satisfied. Manageable, I think it's self-explanatory. If this fails, you can check the next one. Second one is same. Process should be critical to generate the output. You can use the same word. Process significantly contributes, or you can use the same word. What is that? Process is critical to generate the output. And the process is unique and scarce or hard to replace without incurring significant cost. If you're not taking workforce, it's fine. One, process should be critical, and process also so unique and scarce that you cannot make another process without incurring a significant cost. Like now Google, all of us use Google search engine, right? Now you tell me, Google ka process easy to replicate? That has taken years of effort. No, because no matter what you search, in hardly few seconds you get so many outcomes. And first of all, outcome is not one page. We stop at one page. Yes sir. You have thousands of clicks, right? Thousands of results, but we get bugged. Maybe first page, second page, maximum we may search. In 99% of the case, we'll not even look at the second page. When we do a search, whatever it displayed, we stop there. Yes. But what is that process? That Google ka process is very common or very unique. Now, if you want to replicate another Google, you can, but will it come easy, or you have to spend a lot of money on that? That is what they're trying to say. One, process should be critical to generate the output. Even if you are not taking workforce, no problem, but your process should be so unique, so different that if you want to create one more process, can you create it easily, or you have to put in a lot of money? You'll have to put in a lot of money. In that case also, you could say process is substantive. If process is substantive, it becomes a business acquisition and not an asset acquisition. Clear, sir? This is one that is given there. Any problem? This is the case when the output is available. Output here refers to your revenue. If company is not generating output, startup companies, if they are not generating revenue, same condition, their own condition. Tell me once this, it's the same. What is this condition again? Tell me without looking at it. One, process should be critical to generate the output, and along with other inputs, you should also take over the workforce. That's all. If these are satisfied, then it becomes, you say process is substantive, and if it is process is substantive, it becomes business acquisition. If a theory case study comes for 2 to 3 marks as a descriptive, you have to remember this and write. Doubtful, such questions are pretty rare in exam setup, to be honest. If at all it comes, you'll have to do. Otherwise, donate the marks to IC. Your choice. Okay, na? But yes, not that popular, let me say that. So rest is your call. Fine, Sarji. And this is what case, these two under what case we studied? When the test was taken and it failed, or if the test was not taken, when does it become a business? If that test is taken and if it passes, automatically it becomes what, sir? Asset acquisition. This has a numerical significance. Can we go over to that? Or you need a minute on this? Okay, Ji? Okay. Now let's look at this. When does this test give the result pass? When can you say you have passed the test? We said test has passed when the fair value of gross asset, if it is concentrated on a single or a similar identified asset. What to? When the fair value of the when the gross asset acquired is concentrated, or fair value of the consideration paid also you can use, is concentrated on a single identifiable asset or a group of similar identifiable asset. I'm sure you would have not got it. No issues. We'll look at it the numerical way. Okay. If it is passed to business acquisition or asset acquisition. If output is available and one of these two conditions is satisfied, means business acquisition, correct? If it is not satisfied, then it may be asset acquisition or something else. It's definitely not BCom. Okay, in this case. All right. Now, okay, fine, no problem. So when it comes to test ka result pass, two things we need to calculate. One, we want fair value of the gross assets acquired. We want fair value of the gross assets. This number, no, we compare it with asset ka value. Okay, it's very simple, or maybe first I'll tell you in layman language and then maybe we'll go to the number. What we are trying to say is, suppose subsidiary company has a building worth 1,000. Subsidiary company has a building whose carrying amount is how much? 1,000. Okay, everybody good? Now let's say you calculated this fair value of gross assets. There is a particular way to calculate it. It is there in your next page. You don't have to worry. I've given it here. Okay, there is a particular way to calculate the fair value of gross assets. Suppose you calculated fair value of gross assets and you, let's say, got it as 950 assumption. You calculated. How to calculate, I'll tell you in a bit. First I'm telling you what is this result ka, what is this test trying to say. What is this building ka value as per subsidiary books? 1,000. You calculated a fair value of gross assets, something called fair value of gross assets. You calculated. How much have you got it? 950. Now can you tell me this in percentage? 950 constitutes how much percentage of 1,000? This 950 is an amount. Can you tell me in terms of percentage? 950 constitutes what percentage of 1,000? 95%. So how did you calculate that? 950 divided by 1,000 into 100 you did, and you're getting 95%. Agreed, sir? This is what you did. What is this test trying to say is calculate something called fair value of gross assets. That's nothing but amount paid, consideration paid. Now use your common sense. How much is the consideration paid? 950. What is the building ka value? 1,000. That means whatever consideration you're paid, or maybe let's take this as a bigger number. I think it'll make more sense. Okay, let's take this as maybe 1,100. 1,100. So calculate or leave it. Okay, you got it, no? Or else. Now in this example only, if I continue, if you want, out of consideration paid, out of the total consideration paid, 95% of the consideration is concentrated on one asset. Oh, see, when you buy a business, you'll have to pay PC, no? When you have to buy a business, you pay PC. Sorry, 95% of PC what you paid is related to one asset of subsidiary called building. Now use your common sense. Have you really acquired the business of subsidiary or this one asset of subsidiary? One asset. So if the consideration what you have paid, that is PC, if it is concentrated on a single identified asset, if the PC that you have paid, if it's majorly concentrated on a single asset or a group of similar asset, that means you have not acquired a business, you have really acquired a asset. So here, if 95% of PC, if it is related to one asset called building, means you are not really interested to acquire a business or subsidiary. What you wanted from that subsidiary was this particular building. So in reality, you are interested in this building. So show it as building acquisition and don't apply IND AS 103. That is what this test is trying to calculate. Okay, so it's basically in simple language, if I have to say, compare how much portion of PC is paid towards one asset. Calculate that in percentage. They have not told any percentage. They said is acquired is concentrated. They said use the word concentrated. What is the percentage of concentration? They have not mentioned. Whether this percentage should be 60, 50, 90, 20, 30, they have not mentioned. But ICA books, there is one example currently where they have given an answer. So for our class purpose, I think the answer there was 91%. So maybe for exam, we will take here, ICA interpretation of this concentration is 90% or more. Let's take it. You calculate this percentage, and if it is 90% or more, then it's directly asset acquisition. This percentage not mentioned in the standard, or it's based on the ICA question I'm telling you. So if ICA comes out with another question and takes a different percentage, we'll have to follow that. For now, we have only one question where the percentage was taken as more than 90. So I'm using that as a base for explanation. Comfortable? So basically, again, to retune, what is it? Calculate if the PC is, if the amount of PC that you have paid, if 90% of the PC, if it is related to one asset, if it is related to a single identifiable asset or a group of similar asset. So if majority of the PC, if it is related to one set of asset, means you are not really done a business acquisition, you have really done a asset acquisition. So hence, we say if this test is taken and if it passes, then it is automatically what? Asset acquisition and not a business combination. Okay, people. That means two datas we need for passing this test. What are those? Fair value of gross assets and asset ka carrying value. Asset ka value, they will give it to you in the question. So you may have many assets, no sir. You may have building, you may have machinery, may have debtors and all that. Yeah, you may have many assets. Now check, you don't have to test it for every asset. Check among all the assets, which asset has the highest value. Which asset has the highest value. That highest value asset, you find out the percentage. If that percentage is 90% or more, test is passed, asset acquisition. You don't have to test it for every asset. The asset with the highest value, for that if you test, good enough. Clear? You'll see the number. So basically you need asset ka value and you need to calculate something called fair value of gross assets and compare them and get it in percentage. If the percentage is 90% or more, asset acquisition. That's all. Okay, na sir? I'll talk about this group of similar identifiable asset if you want in a bit. First, can we maybe quickly try to get this first? Okay. Now first, what is the step now? How to calculate? Fair value of gross assets. For that, this particular step. Fair value of gross assets. I've written it over here. Okay. How do you calculate fair value of gross assets? Now people, this is same as your LOC. LOC. When you do LOC, you calculated gain or loss. Do you remember? Give me the steps. Sale consideration. Then fair value of our existing investment plus NCA. Correct? Deduct the net assets. No, it's not fully. For similarity purpose, I'm saying you can think of like gain LOC and try to remember this formula. First three parts are same. Till NCA, it's the same. What is it? Fair value of consideration paid plus fair value of the existing investment plus NCA. Are we okay? Any problem? Now look at the heading. What is this? Fair value of what asset? Because this test is trying to consider whether the amount you have paid is concentrated on a single asset. That means will this test consider liability or only asset? This test will consider liability or only asset. Now we want to check whatever PC you have paid, is it majorly related to one asset? I mean, this asset is, do we need a net asset for this calculation or we need asset only? That's the reason it is not net asset, it is gross asset. Because if you calculate net assets, liability will be reduced. Now we are trying to find out what you have done is a asset acquisition. To find out whether it is asset acquisition, we don't need liability. Correct? But consideration what you have paid, the consideration what you have paid is for assets and liability. Okay. Now people, if gross asset is 1 lakh, gross asset is 1 lakh. From this, if you reduce liability, let's say liability is, let's say 15,000. How do you get net assets, or how much is net assets? How do you get net asset? First of all, asset minus liability. If the total asset is 1 lakh, total liability is 15, means what is net assets? 85,000. Correct now? Now, if I give you net asset, if I give you liability, can't you find out gross assets? How do you find gross assets? From here, how do you go up? You'll reduce 15 or you'll add 85,000 plus 15,000 you do. Correct? No? 85,000 plus 15,000 if you do, you'll get 1 lakh. Correct? Everybody good. I mean, this 15,000, what is this? Liability. You're minusing or you're adding? Now, the consideration what you have paid, the PC what you have paid, is it for gross asset or it is for net asset? The consideration what you have paid is for net assets. But we need net asset or we need gross asset? From net, how do you get gross? What should you do for liability? Add back. That's the reason. Next step, fair value of liabilities you add. Fair value of liabilities you add. Easy. Excluding DTL. DTL is a bookish asset. Deferred tax asset, deferred tax liability. We don't need that, so leave that. Okay, sir. Then minus cash you do. Minus cash you do. Because if you pay PC of, let's say here, let's say we paid a PC of 3 lakh. Subsidiary already has a cash of 10,000. Now you tell, though you gave PC of 3 lakh cash, 10,000 cash will come back to you. Because a subsidiary, see, after you do business acquisition, whatever asset subsidiary has now belongs to the parent. Parent will have control over it. So now you touch your heart and tell, did parent really paid 3 lakh or 290 only? 290 only. Because though parent paid 3 lakhs, if subsidiary has 10,000 cash, that 10,000 cash now belongs to parent. So on one hand, you are saying 3 lakh went out. On another hand, 10,000 is coming in, means net how much is it? 290. Hence, cash balance, whatever we have, we need to minus. Because we really don't have to acquire it. Because we don't have to pay any extra money for cash. So hence cash portion you excluded. Deferred tax asset if you have excluded, because these are bookish assets. Okay, this is included over here. Usually the consideration will include that, so minus that as well. Cash and DTA you minus. This goodwill due to DTL also, very rare scenario. This they will not give mostly. By doing all this, you will get a number called fair value of gross assets. That's how to calculate it. Now this number you compare it with what? Subsidiary ka highest asset value. Whichever subsidiary has an asset with the highest value, compare it with that and express that in what? Percentage. If that percentage is 90% or more, then the test is failed or passed. Then it's an asset acquisition, not a business combination. That's how to find out. We have one numerical question. I'll take you through that. But first, can we have a quick recap of whatever we have done till here? Okay, what's a standard name we are doing? We have covered IND AS 103 business combination. Okay, so business combination standard applies only once, that is on the date of control. So business combination is a simple scenario where acquirer, an investor, has got control over another company called acquiry, or parent has got control over subsidiary company. So whenever business combination scenario has come, you need to really clarify, is it really a business combination or is it a asset acquisition? Because treatment are different. That's the reason. Now, if you want to call something as a business, because for it to be a business acquisition, first it has to be a business. For it to be a business, we look for three parameters. Those are input, substantive process, output. Input means resources. Resources meaning your PPE is an intangible asset and human resource, etc. etc. Another one is substantive process. Substantive process means, see, just by machinery you will not get revenue or finished product. There has to be a clear rules where the machinery has to be stored, who has to use it, how many hours you need to use it, what is the cooling period, right? What should be the maintenance, right? All this, there should be a clear protocols or rules. That we are calling it as a substantive process. Now input, when it combined with substantive process, you get the final number called output or a revenue. Okay. Now what a substantive process also can be a little ambiguous, because it's not clearly defined. Hence, they brought in one more test called what? Optional concentration test. Okay, if this test is taken, if the test is, as it is optional, company can take it or reject it. If the company takes up this optional concentration test and if the test ka result is pass, then automatically it is asset acquisition. If the test is not taken, or if it is taken and if it fails, then you will have to do a further assessment. What further assessment? First, check whether output is available, as in revenue available. If revenue is available, then for you to call it as substantive process, one, the process should be critical to generate the output, and along with other inputs, you should also take over workforce, employees. If that fails, check for the second condition. Process should be critical to generate the output, or the process should be so unique and scarce that you cannot replace it without incurring significant cost. One of the two conditions should be satisfied for the process to be called substantive. Input is there and a substantive process is there, means then it becomes a business. Then if it's a business and if you have acquired that business, it's a business combination. If output is not available in case of startup companies, then first condition, process should be critical to generate the output, and along with other inputs, workforce also should be taken over. Only in that case, process will become substantive and it becomes business acquisition. This is pure theory. Question will specify most of the data. You don't have to worry much. Now, when can you say this test is passed? For that, we need to calculate two things. Fair value of gross assets. And how do you calculate? Basically, you say concentration test is passed when the fair value of gross asset is concentrated on a single identified asset or a group of similar identified assets. Okay, so two things we need to compare. Fair value of gross assets with subsidiary ka high asset value. Express it in percentage form. If that percentage is 90% or more, then test is passed and it's an asset acquisition. And how do you calculate this fair value of gross assets? Similar to your LOC. First is consideration paid. Then fair value of our existing investment. Add NCI. But we need gross assets. The consideration what you paid is for the net assets. So from gross, from net, how do you get gross? Add back the fair value of liability. Then deduct few assets which are not required for this, which is cash and DTA and goodwill also. Then you will get fair value of gross assets. That's all is a step. Okay, now let's do a thing. Let's apply this off and then I'll come to that group of asset ka concept we'll discuss. But first we will do up this question. Look at this. It's an example really in study material. Check. Just calculator is enough. On concentration test, entity holds 20% interest in entity B. Currently, entity has how much stake in entity B? 20%. With 20% you get control or SI, significant influence. Subsequently, entity A, same entity, parent, acquired another 50% in entity B by paying 300 crore. They had 20, now they've added how much more? 50% more. So total has become 70%. With 70%, do you get control? Yeah. That's only we used to call it a step acquisition if you remember initially. For this 50%, how much did you pay? 300 crore. This is the consideration paid. We have to take fair value of our remaining investment also. That they must have given somewhere here. The fair value of entities A's previously held interest is 80 crore. So currently we paid 300 crore. Fair value of existing investment is 80 crore. That they have given. And then they've given a fair value of assets acquired and liabilities assumed. Building, a subsidiary has a building whose fair value is how much? When you do business combination, we'll take subsidiary all assets at fair value. No? So building ka fair value is how much? 1000. Subsidiary also has a cash of 200. They have a financial liability 800. DTL 150. Fair value of entity B is 400 crore. NCI value is they've given to be 120 crore. Because we have 70% means NCI will have 30%. No? 30% of 400, which is 120 crore. All the data they've given. You need to prove whether this is an asset acquisition or a business combination. Okay, first let's calculate fair value of gross assets. How do you get fair value of gross assets? Tell me once again, don't look at the screen. Consideration paid, which is 300 crore, plus fair value of our existing investment, 80 crore, plus NCI. Deduct the add back. Consideration paid is for the net assets, but we need gross assets. So from net, how do you go to gross? Liabilities you add. Here your liability is financial liability add back. Clear? DTL you exclude. Leave that. DTL you don't have to do anything. Add back financial liability of 800 crore. Okay, that is one. Then minus cash. Okay, minus DTA and goodwill. DTA and goodwill not given. That's all. That's all we have to do. Check here. That's what I've done. Consideration paid 300 crore given here. Fair value of our existing investment 80 crore. Add NCI given 120 crore. Then add gross assets or basically add financial liabilities, which is 800 crore, excluding DTL, right? Then deduct cash, goodwill, DTA. Cash you will deduct how much? 200 crore. DTA and goodwill not there. So when you do it, you're getting 1100. Any problem? Okay, now people. Now effectively, what the standard is trying to say is, effectively how much have you paid? For assets, for all assets put together, you paid how much? 1100. Now this number, is it majorly for one asset or group of assets? You need to find it. Okay, now subsidiary has multiple assets. They have building, they have cash. Which is the asset with highest value? Building. So concentrate. Totally looks like you have paid 1100 crore. But what is the building ka value? The asset with the subsidiary ka asset with the highest value is building. Highest asset value, if you take, that's enough. If you have machinery and other asset also, take that asset with the highest value, which in this case is building. Now express this in percentage. Looks like out of 1100 crore, whatever you have paid, 1000 crore is for the building alone. Out of 1100 crore that you have paid, totally you have paid 1100 crore. Now out of that, 1000 crore is towards building only. So what percentage? 1000 divided by 1100 into 100, which is 91%. Clear? If you calculate 1100 ka 91%, how much are you getting? 1100 ka 91% if you calculate. Getting rounded off 1000 crores only. Correct, no? Yes, sir, people. That means what? 91% of whatever amount you have paid. 91% of whatever amount you have paid is for one asset called what? Building. Is this percentage more than 90? Yes. So what is it? Is it a business acquisition or really a building acquisition? So 91% of whatever money you have paid is for one asset called building. That means you are not really interested in subsidiary ka business. You are interested in subsidiary ka building. So it is since 91% of consideration paid is concentrated on a single identified asset. Which asset is it concentrated on? Building. It's an asset acquisition and not a building acquisition. Yes, sir. I think previously when I took the example, percentage we calculated wrongly. I think maybe your mind is working in that direction. So that's fine. Hope it's okay with you here at today. That's the reason I wanted to change that. Then I thought you got it, leave it. Understood, huh? So, but this is how you calculate the percentage. Okay. So obviously consideration paid will be little more than the asset ka value. It can't be lesser. Okay. So it will be more. So percentage you calculate like this. Asset value. If you want the percentage formula also, we can build it. What is that? Asset with the highest value, that in the numerator, divided by fair value of gross assets in the denominator into 100. That's a formula if you want it. Okay. So if this percentage, there is no magic number. Okay. Based on this example, I'm saying, since this example has taken 91%, for our exam, we will take it as, if this percentage is 90% or more, then we will take it as asset acquisition. But yeah, we'll watch out for ICAI guidance on this percentage. If they give any other guidance, we'll adopt it. So far, I have not seen. So hence, we'll take 90% as a benchmark. That's all, people. This is one type of numerical question that can come here. Maybe 2 to 3 marks. I still feel, again, 2 marker MCQ only is better for all this. But anyways, I'll leave it to the examiner to decide the weightage of marks for all this. Now, this is done. You have any doubt or sorted? Clear? Pakka? Everybody easy now? Okay, so this is done. Next, maybe I'll go back to the pointer. If you read this line, can you tell me this definition once again? When can you say test is passed? When can you say test is passed? When the fair value of gross assets, if it is concentrated on a single identifiable asset, or not only single, or a group of similar identifiable assets. In the previous example, the consideration paid, we compared it with a building. Building is what? Group asset or single asset? Single asset. What is this group of identifiable asset? This fair value of gross consideration, what you have paid, no? You can compare it with a single asset or a group, not any group of similar asset. Like if you have 3 buildings, you can combine and do the test. You don't have to take building 1 ka value and compare it with fair value of gross assets. If you have 3 buildings which are similar, let's say you have 3 factories next to each other, same value, same dimension, similar nature, like revaluation, you did know, similar class of asset. So if you have, this is also basically same. If you have 3 buildings which are similar, then you can add them and then do the concentration test. You don't have to do them individually, you can combine them. But in order to combine, they should be similar. Random asset you cannot combine. A patent I will combine with building and I will do the test. Not is patent to building the same or different. So tangible, intangible and all you cannot combine. So basically this test you can compare it at an individual level or a group of asset level. But if you want to test it at group level, asset should be similar. Similar assets only you can group them together, not random asset. Okay, like tangible asset, intangible asset, you cannot say similar. You cannot combine them and do the testing. That's what I've said. Okay. Furniture or machinery, can you combine and do the test? Are they similar? No. If you have 3 furnitures which are similar, and then you can add them and do the test. So if you have land and building, what this test says is, if you cannot separate the asset, then you can combine them for this test purpose. For depre purpose, we will segregate, depreciation purpose. But this test is saying that if there are 2 assets which are in together, okay, by nature if they are together, right, you can take them as one asset. You can combine them and do the test. Okay, provided if you incur without significant cost. Now, if you want to separate land and building, you'll have to incur a significant cost. You need to demolish building. No? So demolition will come with a substantial cost. That's what they're saying over here. 2 tangible assets can be considered as a single identifiable asset if they cannot be separated without incurring significant cost. Meaning, if you want to separate them, you have to incur a lot of cost. In that case, no need to treat them separately. You can combine them as one. Example is land and building. Meaning, what I'm trying to say is, in examination, if they give you land and building, should you have to separate land, separate building for this test purpose, or you can treat them as one? You can treat them as one. Because to separate land and building, you will incur a significant cost. Demolition charges. So that's what this test is trying to say. But in order to group the asset, any random assets, you cannot group them. They have to be similar. That's it. Like 2 machineries can be combined and test can be done together. But a machinery and a furniture, or a machinery or an aircraft and all, you cannot combine because they are not similar. Okay, na, Sarji, that's what I've written in this points. I need out in this now. No? Sorted? And as I said, since this concentration test is optional, it's totally entity choice. So like, suppose company has done 3 business combination. They've not done one, they've not acquired 1 business. They've acquired how many businesses? 3 different companies if they've acquired. For a first business, they can apply concentration test. For the next 2, they may not apply. Or for all the 3, they can apply. Or for all the 3, they need not choose to apply. So you can apply this concentration test on an individual basis. For one BCom, you can apply this test. For another BCom, you can choose not to apply. Or for both, you can apply. For both, you can choose not to apply. Totally entity ka choice. How they want to play it. Okay, sir. That's what this point is all about. Now, this question is over. Another couple of theory questions is there. Can we wind up? Can we quickly do that and wind up the day? And I think tomorrow we will take up whatever else is remaining. Look at this. Question number 1. Page number 1.4. Company A is a pharma company. Since inception, company had been conducting in-house research. Sir, the moment they say research, it's good enough. Now you tell me, if you want to do a research, you need raw materials, it's an input. You need machinery, input. You need workers, which is an input. Input is there. Just with the raw material, machinery, workers, will the research happen, or there should be a process? There should be a process. Who will do what? That machinery will be used for what purpose? There will be a clear process. So research and all, when you're doing the process, is it like just like that, or it will be a proper protocols and things? There will be a proper, because this research, right? You don't want it to take, all this research will involve heavy cost, sir. Randomly you will not do it. So there will be a clear process, who will do what and what time frame, everything will be called out. That means by reading the first line only, I got to know what is it. Is it a business? That's the question is that. Is it a business? Input is there. Process is substantive. That means automatically what? It is a business. Output may be available. See, when you're doing research, at research stage only, you will not generate the outputs. No? If research is successful, then only you will produce the output. As I said, that's the reason output is not mandatory. As long as you have input and substantive process, it becomes what? A business. So far, first line only is give away that input is also there, process is also substantive. So they're doing in-house research through skilled workforce and recently obtained IPR in the form of patent over a certain drug. So the research is successful and they have got also a patented, they've got a patent in their name. The company has a production plant that has recently obtained regulatory approval. Obviously, if you have to start the production, you need to take government approval. No? Recently, we have got it. However, company has not earned any revenue so far and does not have any customer contract also. So they are saying is company B acquires company A. A is doing all this research. Now B has acquired A. They are asking basically, is it a business and is it a business acquisition? Yes, of course. Company A, what they are doing, the activities they are doing comes under the definition of business. Since B has acquired A, it is a business acquisition. Now don't come into concentration test. Have they told all that? That is option. Here simply they are asking, is it a business? Yes, it is a business. So hence the acquisition made is also a business acquisition. Over. Next look at this. Modifying the above illustration. If company A had revenue contract, in the first case they told company is not having any revenue. Now they are saying company A has revenue contracts and sales force. They also have a workforce, sales team basically. Sales force as in marketing team or sales team. Such that company B acquires all the input and process other than sales force. Now they're saying B has acquired A. B has acquired A. Now A has a sales team. They are already generating sales and they also have a sales team. Did B acquire sales team of A or they did not acquire? Read this line. B acquires all the input and process other than sales force. That means B is interested in sales team of A or they are not interested. They are not interested. Now they are saying whether it's a business or definition is satisfied. Sir, this no, you'll have to give a subjective answer. Now think. B no has acquired A. Right? B feels they already have enough, quite a big sales team. They feel they already have. They already have a big sales team. Do they need A ka sales team also? Not required. So if B already has that workforce with them who can carry out the activity, then why will we need other guide? Because unnecessary extra salary we'll have to pay. No? So we'll have to cut them. That's what happens when one company acquires another business. Now, many roles, many people they fire because they don't need them. They already have people to do that role. So here if B already has a workforce with them, they don't need a sales team of A again. Okay. Or if B feels A is paying a lot of salary to the sales team. A, the salary that is paid to the sales team is very high. B feels we can fire them. We can hire new employees easily from the market at a lower price. Now what do you think B will do? They will take over A ka sales force or they'll fire them? They'll fire them. That's what you need to write answer. if that it is a business combination, provided if the missing inputs, what is the missing inputs over here? At sales force. If it can be obtained easily from the market. If whatever inputs you have not taken over, that workforce B did not take over, right? If you can easily replace it, if you can easily get that missing inputs from the market, or B already has those workforce, then it will be a business combination. Okay, now everybody got the answer? Even if your workforce, if you have not taken over, no problem. Check, can you get that workforce again easily from the market, or do you already have that workforce? If one of these two parameters is satisfied, means then it becomes a business combination. Now, if you modify the illustration, suppose A Limited has some key employees. They're very, very critical, right? Because without, in case of software company, if you don't take over software developers, engineers, then will it make sense, or can you survive? No. So if those inputs, if B does not take over, means then it will not be a business combination. Because if you don't take over critical inputs, then you can't replace them that easy. So you need to check. Here, what is not taken over? Sales team. Sales, if not these team, you can find enough people. No? Sales is not a specific role, right? It's a generic role, and you can get a sales force. So that's what we need to answer over here. Got the answer, I'm thinking. Everybody. Okay, na sir? Confusion, I got it. Okay. Now, people, in business combination, we say there are about 4 steps. You don't have to answer the question in the steps, to be honest. Maybe 1 or 2 questions I will solve through the steps. But when they give you a big question on IND AS 103, you can follow whatever order you want. Just the order is mentioned in the study material. 1 or 2 problems, if required, we will keep the order. So, first step in business combination is to identify the acquirer. Identify the who has got control over who. That we need to identify. So, what to identify, sir? It's very easy. If A has purchased 90% in B, then A is the acquirer, other company is acquiree. You may get like that. There are some scenarios over here called reverse acquisition. On paper, it looks like A has acquired B, but the reality may be B has acquired A. Tomorrow I will discuss. There is a reverse acquisition. Hence, there is a first step called identification of acquirer. We'll see. That we will discuss tomorrow. Usually it is straightforward, but some cases it may not be straightforward because there is something called reverse acquisition tomorrow. Second one is to find out acquisition date. Acquisition date means the date of control. There are some pointers tomorrow we will discuss. Third one, we already know. On the date of control, we find few things. What are those? Subsidiary ka net assets, you'll have to value them on a fair value basis. You'll have to take subsidiary ka net assets at fair value. Then you'll have to find out NCA. Either under PSNA basis or fair value basis, or basically that's a fourth step. Basically in the third step, we find out fair value of net assets and NCA. Fourth step, we find out goodwill BPG. In fact, all these are not required. Aram se we can do it in bigger problem, but still let it be. These are the 4 steps we say that comes in business acquisition. Identify who is the acquirer, who has got control, what is the date of control. On the date of control, find out subsidiary ka net assets on fair value basis. Then find out NCA under PSNA or fair value. Then last step is to find out goodwill or bargain purchase gain. All this calculation is pretty easy. I think you already know what is that, people. What are the steps to calculate goodwill or BPG? PC, add NCI, deduct the fair value of net assets. You will get positive number goodwill, negative number bargain purchase gain. Yes. That's what we have done. Now there are some issues that will come here. That's what IND AS 103 is. Okay, in consolidation, when we did it, we saw 2 varieties of PC, especially in step acquisition, right? Actually, there are 5 components of PC. You will get the other 3 over here. Like this. In PC, there will be some steps. In CMA, there will be steps. Some of those extra finer points is covered in IND AS 103. So, base you already know, little extra points we need to study here. This is the steps. Okay, na sir? Okay, or maybe this one. Okay, maybe this question alone, maybe I'll do it off and wind up for the day. Identifying the acquirer. How do you find out the acquirer? Acquirer is that person who has got the control over another company. Usually we say control when you have more than 50% voting power. Yes, no? Control ka definition you already know. What is that? You should have power over investee. You should have exposure to variable of rate of return. Ability to use the power to affect the return. You say you have power over investee when you have right to direct the relevant activities, and that right to be a substantive right and not a protective rights. All this we saw in consolidation also, ditto here also. And usually how do you get control? Voting power. If you have more than 50% voting power, automatically you have control. But we have seen in consolidation questions, sometimes with less than 50% plus few other factors can lead to control, like power to appoint or remove your KMPs. If parent company has a right to appoint or remove the KMPs of subsidiary company, with less than 50% also you can establish the control. Or subsidiary company ka loan ka guarantees is given by parent. Subsidiary is dependent on the parent for their funding requirements, for tangible, intangible asset, raw material requirements. All that we saw. Those are some other parameters. But as far as the exam is concerned, numerical questions are concerned, we only take 50%. If more than 50% is there, means automatically there is control. Okay, na sir? That's pretty much it. Now, this again, it's okay. This one question you just check. Company P, a manufacturer of textile products. One company P is there. They have acquired 40,000 shares of company X. P has acquired 40,000 shares of X. All right. Out of 1 lakh shares in issue. 1 second, hang on. X has how many shares in total? 1 lakh. How much of that has been acquired by P? 40,000. Find out the percentage. Out of 1 lakh, P has 40,000 means P ka percentage is 40,000. That means others are owning 60%. That's the current setup. Now just check. As part of the same agreement, company P purchases an option. Purchases the option to acquire additional 25,000 shares. We have already acquired how many shares? 40,000. Now we have an option contract that we have entered. Through this option contract, we can buy additional 25,000 shares. Clear? Okay. The option is exercisable at any time in the next 12 months. So in obviously options will have a price and it will have a duration. The duration here is validity is 12 months. Within 12 months, if we want, we can buy another 25,000 shares. Okay, sir. This option price includes a small premium to the market price to the transaction date. So if suppose let's say market price is 100 rupees. Market price is 100 rupees. Will we buy this 25,000 at market price or we pay a premium? Sir, if the premium is very high, then the option is deeply out of the money. If the premium is very high, deeply out of the money means loss scenario. Let's say if market price is 100, okay, we have to pay, let's say 80% of market price, 80% more than the market price. I mean, this is looks like a big premium. Yes or no? I mean, this option is in the money, at the money, or out of the money? Out of the money. If it is out of the money, what are the chance that this option will get exercised? Less chance or more chance or less chance? That means this is not substantive right. You remember for control definition, we'll take POS. This we used to call it as potential voting rights, if you remember. We'll take to a POS only if the right is substantive. Okay. Here we are not paying market price. We are paying a little more, but we are paying a premium, but the premium is big or small premium? Small premium. I mean, this is deeply out of the money or not deeply out of the money? Of course, people, because maybe if you buy 25,000 more shares, you may get control. To get control, if you have to pay a little extra, will you mind? By paying a little extra money, if you can control another company, then I don't mind paying that extra. Yes, no? So it is out of the money, but is it deeply out of the money? No, it is not deeply out of the money. I mean, this right is what? It is substantive. So will you ignore this 25,000 for control calculation or you will include? Since it's a substantive right, we will include this and then calculate the control. That's what IND AS 103.110 also said. Understood, everybody? Okay, this is us. After the above transaction, the shareholdings of P Limited, check this. The shareholdings of P's two other original shareholders, are 35 and 25 each. So that means basically this company X now has 3 shareholders. Who are those? P and then 2 other guys. P is holding currently how much? 40. One other guy is holding 35. Another person is holding 25. So if you add all this, 40 plus 35 plus 25, you're getting 1 lakh. So currently, this is the setup. Now, P might have purchased only 40, but P also has an option to buy additional 25. What about others? Each, keyword there is each. Each of the shareholders also has a currently exercisable option. So only P has an option to buy additional shares or others also? Other 2 shareholders also, each of them, each, this is a keyword. Each of the shareholder also has a currently exercisable option to buy 2,000 additional shares. I mean, this additional shares not only we will buy, P will buy, but other shareholders also will buy. Take a calculator. How much additional we can buy? 25. Other than us, there are two more. We can buy 25. We can buy 25. Another shareholder also can buy 2,000 more. Another one also can buy 2,000 more. Because other than us, there are two more. No? Each of them can buy 2,000 more. So totally, how much additional shares subsidiary will have to issue? 29. Currently, how many shares they have? 1 lakh. After the option, they will have 129. Agreed? After this option, they will not have 1 lakh. They will have 129. So the total share after the option will be 129. In this 129, parent will own how much? 40 plus 25. How much is that? 65. No? 40 plus 25, 65. Out of 129, parent will own 60. Okay, na? And that means what is parent shareholding percentage? 50.38. Balance will be others. Do you agree? Is it more than 50%? Yes. That means now you would tell me, does P have control over X? Yes, P has control over X. Because this option, though it is POS, it's a substantive right because it is currently exercisable. So therefore, what is it? P has a control over X. Has P already purchased this 25,000 additional shares or not yet? Not yet. But will you consider this 25,000 for control? Yes, because that right is a substantive right. It is not deeply out of the money. If it was deeply out of the money, then you would have considered this or you would have not considered. You would have only taken this and said, no, we don't have control, we only have significant influence. Since it is not deeply out of the money, option also we need to consider and find out the percentage. After considering that potential right, that is option, if you find shareholding percentage, it is more than 50. P ka shareholding percentage is more than 50. Hence, P has control over company X. All the story not required. Only this, if you remember, that's enough. Options also we should consider because it is currently exercisable, meaning that right is substantive right. That's it. This is the calculation. Okay. I think this is enough for today, people. Tomorrow we will take up the other parts of this particular standard. Yeah. Thank you.